joining us to talk more about markets and the new reality that is we are in a coalition government times. Gurmeet, good morning. Thank you so much for your time. Now, the sense is that, and that is why the screen is looking much better than yesterday, is that coalition governments also have produced positive returns in the past historically. India has done pretty well. Not necessarily that other governments do not give respect to corporate India or market. Nobody wants chaos at that end, stable government and all of that. The sense is that the larger themes of defense, railway, manufacturing, do that remain on course, or do you think that there is trouble there?
Ajay, I don't think there is any trouble as far as infra defense bills are concerned. It's just that those stocks had run up 5-6x in a year. Some of the PSUs were trading at 50, 60 times earnings, 25, 30 times EV by EBITDA, and were probably factoring in the order book for next 5, 7 years. So a lot of good news was in the price, and there was a bit of it was waiting for some knee-jerk reaction, and that came in form of exact polls. What also, exaggerated the fall was the fact that the exit poll built up expectations. Though the same stocks went up 10-15% on, a day before the exact poll came in. And then, the reset happened. So I think a bit of a rotation will happen because the government probably in a coalition, the tougher reforms, let's say, for example, commercial tariff in power is very high for manufacturing to do well because we subsidize agriculture and bit of domestic tariff. Similarly, labor reforms, the tougher reforms, I think might take a bit of a backseat or probably would require more maneuvering. But the normal policy reforms like the PLIs to be given for defense or power solar panels or auto and in general the economic reforms which are more BAU and not really needs coalition dharma will continue. So I think it will be a bit of a balance between growth and maybe a bit of rural populism because if you see UP and Maharashtra, it's largely been agri distress. And also, if you see the GDP numbers which came, while you're very happy with 8.2, the agri sector was only 1.4, 1.5% GBA. So the agri distress is for real. And I think the budget will then try and address it. And that's why you see this reaction in FMCG stocks, two-wheeler stocks, and some of the agri names now.
So, should one, as an investor, be chasing this consumer, which till 3 days back nobody wanted to touch? Now, everyone on the street finds a lot of merit in consumer. In fact, let's be honest, even when the results came and the commentary were good, nobody was ready to, what's the hurry? Let's see the evidence of numbers. But things completely changed in 2 days. Is it prudent to chase consumer
Uh,
slash FMCG or wait for corrections?
No, you got to be selective. See, for example, HUL still is 50 times. It's not going to grow more than 10-12%, best case scenario, right? And that's this I'm talking about realization. So volume growth could still be high single digit because of the rural growth will take time. It's a bit of a flight to safety. FMCG, bit of pharma will always be flight to safety. So you got to be selective here, in my view. I think some of the rural facing names, for example, Britannia's commentary was good. Dabur is good. Varun Beverage, despite high valuation, seems to be adding more geographies, building more capacities. Tata Consumer is another name which is into food, ready-to-eat food, pulses, breakfast cereals. So I think you got to be a little selective here in terms of chasing the FMCG names and have tempered expectations. This is not the Titagars and HALs of the world where suddenly you will find them, multiplying over a bit. These are steady names and will give you steady returns. So I think more importantly, the return expectations need to be reset. Ajay. We can't have these kind of returns year after year. And I think this daily analysis of the market is leading to a lot of this reaction from investors. See, technically, if you see pre-exit poll, we were at 20 to 500. Right now, we are at 20 to 300, 400. So not much has happened if you see at a broader market level. It's just that because you're so focused on making those returns so quickly in defense, PSUs, power financiers, is where the reaction is coming right now.
Right. Okay, so what kind of behavior is your clientele displaying right now in the last 2 days? Give us a sense of how are things on ground. Because I want to understand one of the biggest, strongest pillars of this market have been retail flows, retail HNI flows. Are they at risk? What kind of conversations have you had with your clients last evening?
No, they were, to be honest, too many calls, despite the fact that we are now 18 years in stock market, but every correction, sharp correction makes you nervous. And yesterday it did. And yesterday, I think till about 12, and 1 o'clock, we weren't sure if the government is coming back. I think once the numbers started fructifying that it will be a third term, but probably will be a coalition government this time, is when I think some base started getting formed. So I think we've always been buyers on dips, Ajay. It's been a few years we've been interacting. It's when you fear the most is when there is the best time to invest. I think yesterday everybody was fearful. And there is that saying in market, no, every past correction was an opportunity. The current one is a risk. So we did deploy some cash yesterday, but to be honest, could not deploy much because till 1 o'clock we didn't have much clarity. But we'll continue to be buyer on dips. But even rotate portfolios. The clients are more interested in knowing what would be the balance be. And this is one learning again. Market keeps telling you more than returns, diversification is important. So if you had FMCG, you had IT and pharma yesterday, you would have fallen less and now you would have recovered more. So it's very important to fall less also when things go north.
What were you selling out of, Gurmeet? If you can share some names, where have you trimmed or ideas?
We obviously didn't get much chance yesterday to trim something, but we did trim some defense names. Not because I was not happy, just that they had become very high in concentration in the portfolio. Some of the names we started with 3-4% weightage, they had become 10-12%. We just brought them back to 6-7%. So I'm not underweight some of the defense names which I like. It's just that I'm just trying to rebalance the portfolio. So we cut some consumer names also, especially on the electronic side like Dixon. We did some trimming in solar. We did some trimming in power names, some of the trimming in railway names, but they're still very much part of the core portfolio. And we are now adding banks. I personally think banks are due. The financials are due. It's just given 10% return versus Nifty 20 to 23% last year. A lot of them are available at good valuations. We are adding some waste management names, which we discussed last time, like Ganesha Ecosphere. That is something we really like. I think it's a genuine ECG theme. We are looking water as a theme. We are hardly recycling the sewage. We're just recycling 20-25% of sewage in metros. Hardly 20-25,000 MKD. Probably need to recycle more than 80-90,000. So that's something we are looking at. And we are now also adding selectively some names where the fall has been very steep today, like some of the railway names like Titagarh. We're getting back after like a 30% fall there.
Right. So you are not logging out of railways. That is good to know. Thanks very much, Gurmeet, for joining us and sharing your thoughts on how you are, kind of approaching this space.
If you like this video, then like, share and subscribe to ET Now.